booking in the last half an hour of trade or no. But for now, the market trending higher and staying at the high point of the day, which is actually a really good sign. Good afternoon, Tamanna.
Yeah, hi, Niraj. What's interesting to me also is look at Nestle's move and ITC's move. And their numbers were okay, sure, but I haven't seen FMCG moving so smartly in a while. Dr. Reddy is another exciting one today.
And the JV.
And that, yeah, absolutely. So in the broader markets as well, you've seen quite a bit of an up move. Let's pull up the indices before we start. Not as much as what you're seeing on the Nifty, because you have the big boys there really pulling up the market. Small caps doing okay. All right, specific stocks. Let's talk about Dalmia Bharat, some of the losers. Cement Pack is having a rough afternoon. Dalmia Bharat, Ramco, JK Cement, all of them down. Dalmia Bharat more than anything else because of its numbers. Numbers weren't exciting. And one of the reasons and what is really giving it pain in terms of realizations is the unexpected sharp drop in cement prices that we saw a few months ago. Macrotech is the other one I want to pull up and see how the street has seen the numbers post the con call. A bit of disappointment there, 3% down, although the numbers on the face of it look pretty good. But profit booking on in Macrotech. Indian Hotels is the other one. They did not give an ARR guidance for Q1 of FY25. We spoke to the management that has said that a lot of their properties are new, which is why it takes time to scale up. So they haven't given that guidance. Stock is 5% down today. So pain over there. I just want to talk about Bharat Forge, though, on the other side of things, where you are seeing an upswing of about 8%. There's a BOFA note out on Bharat Forge. They've set a target price of 1450 for the counter, and you're seeing Bharat Forge doing pretty well this afternoon. MCX is the other one that numbers were okay. Numbers were not bad at all, and Motilal Oswal has maintained a buy and raised the target to 4,400. That stock 7.5%. So some smart moves there. Mass Financials, the other one. We spoke to the management today as well, and they've had a good set of numbers that have been rewarded by the street. Neogen, we saw how chemicals are in focus, and we talked about it earlier today as well. Their volumes are pretty high, and there's a Kotak Institutional Equities buy on it as well. I just want to put up Vodafone if we can, because what a seesaw on that stock that we've been seeing all through the last 1 week or so. Pre-FPO, post-FPO, so post-FPO, that stock up 4% in trade. Overall, I think I would say, Niraj, a good recovery. Also, mid-morning and holding fairly strong. Apart from the blips of a Kotak, etc., everything else is looking pretty decent.
Yeah, very, very strong and a remarkable pullback by Vodafone. A lot of people are extremely bullish on this stock. Be careful and be mindful of the risks associated with a turnaround company. But we've spoken it all along about how this one, now, by virtue of some fundamental factors like 2G customers, and there are a few, one or two that I know very well, who swear by Vodafone, and once they move to 4G, the automatic revenue uptake that comes into the company. So to be watched out for. Okay, let's try and put this market move into perspective. Rajesh Palvia of Axis Securities joins us to talk about the tech and the derivative end of the market. And on the fundamental side, Hemang Jani, market expert, with us as well. Gentlemen, both of you, good afternoon and thanks for joining in. Rajesh, is this move taking you by surprise? And on the back of this, on a monthly expiry day, what are the kind of trades on the index that you would recommend?
Good afternoon, Niraj. Good afternoon, everyone. No, it's not a surprise for us, as we have seen the kind of data which we were seeing since last couple of days on the Nifty as well as on the Bank Nifty. That was giving us sign that this rally can give breakout of consolidation, and especially on expiry day we have broken out the consolidation range. Now we are trading comfortably above 22,500. So that clearly giving us sign that now we are again going to register a new all-time high very soon. Maybe next couple of trading session we could see a new all-time high trajectory for Nifty also, and as well as for Bank Nifty, a very strong recovery despite Kotak Bank is down more than 10%. But the way PSU Bank as well as the other private banks have moved up, we believe that this rally can extend for Bank Nifty also, and as we are now comfortably holding above 48,500, so this level is important to watch for next couple of days. If we hold 48,500, then possible rally can extend to 49,000, 49,200 for Bank Nifty also. So both indices, the data is shaping up on the bullish side only. I think at this moment, one should ride this rally, trail your stop loss at higher side. For Nifty, your stop loss now should be at 22,500. Upside target is 22,750 to 22,800 in the continuation of this up move.
All right, Hemang, let's come to you as well on what you see as the big movers. Just a view on Kotak Mahindra Bank at this point. We've seen sharp downturn over there. The question is there an opportunity to accumulate at these levels? Would you look at this at all? Because at the end of the day, it's one of the large private banks in India. It has a pedigree. They've said they'll fix whatever problems it is that the RBI has foreseen. The experts we've been speaking to say it'll still take about 12 months to come back on board. But would you look at this as an accumulation opportunity, Hemang, or stay away from a Kotak right now?
So the move definitely has come as a big setback. I think, for any entity, if you're not able to acquire onboard clients, it will have, major repercussions, both in terms of reputation, business, so on and so forth, and which is what is reflected in the correction that we are witnessing. I think, at least near term, may be possible that the stock will go through a little bit of, underperformance, but market tends to kind of, discount it very quickly. And we think that, with this kind of a correction, if let's say, if it corrects by another 3, 4, 5%, it will surely provide a great entry point. I think, it requires a little bit of patience to be able to, buy and hold this kind of, stories. Because just to give you a perspective, IIFL Finance and some companies also had a similar kind of an issue. The stock corrected very sharply, 30, 35%. But we saw a very good smart pullback, after some point of time. So, similar thing could possibly happen in Kotak also, because the stock has not performed for an extended period of time, more than 12 to 15 months.
Interesting point that you're making, and actually we have seen that the kind of sharp rebound from some of these counters post-regulatory action. Rajesh, do you see the potential of that on the charts for a Kotak Mahindra Bank?
So, Tamanna, Kotak, after this fall, Kotak is now trading near to its, trading below to its, important support area, which was placed on, multi-year support area that was at around 1650. And in last 5-10 minutes, we have seen again extended supply pressure below those levels. So if it remains below to 1650, then yes, there could be another supply pressure we can see towards the 1600, even 1580 kind of zone. That's the next level on the downside. Though long-term structure is still not destroyed, but still on the short to medium-term perspective, yes, some pain is likely to be there in the stock prices. Looking at the near-term, short-term structure, 1720, 1730 are the key important supply zone on the higher side. So until the Kotak not manages to cross above 1720, 1730 level, it may remain under pressure, and maybe we could see furthermore supply pressure towards 1600 to 1580 kind of zone for the Kotak on the near term perspective.
So, let's get a view from Harsh as well. He's been tracking that story very, very closely on RBI's crackdown of Kotak Mahindra Bank. It is, of course, the stock of the day. Harsh, what struck me is that brokerages are not that negative on Kotak Mahindra Bank vis-a-vis what the impact of this will be, isn't it?
Yeah, you're right, Tamanna. So when I'm going through pretty much all the brokerage notes, you have maybe a couple of brokerages. One, Jefferies, they've reduced the target price on Kotak Mahindra Bank. MK is probably the only one who has reduced their rating on Kotak Mahindra Bank. But outside of that, a lot of the larger houses, including the likes of a Citi, likes of a JP Morgan, they've not really done anything with regard to changing their stance on Kotak Mahindra Bank. They've suggested some concerns, definitely, possibly in the shorter term more than the longer term. And they've also suggested that EPS may be impacted 1 to 2% odd as a result of the credit card business going out. With regard to customers, I think is the key, and that's probably why the reaction on the stock. Customer count has gone up from 3.9 crore Q3 FY23 to 4.8 crore Q3 FY24. That's sharp growth. And how much of that is digitally acquired customers will be one of the key factors which will probably determine as to whether that growth rate that Kotak clocks of 20% plus can continue. And that will probably hold the key, because outside of that, in terms of asset quality, in terms of growth, it's a great bank. It's always been a phenomenal franchise. In terms of just relative valuations, just want to cap this point off. 2.6 times trailing 12 months book price to book, maybe 2.3, 2.2 times is the consensus 1 year forward price to book. Never traded at these valuations, Kotak Mahindra Bank, at least not in the last 2 decades. So clearly at an attractive price point currently from a fundamental perspective.
You know, we had a conversation today with Complete Circle's Gurmeet Chadda. We also spoke with Bernstein's Pranav Gundlapalli on how this move impacts the stock price and the bank. Listen in.
It is surprising, Tamanna, and it's not restricted to Kotak alone. If you see HDFC, Axis, leading private banks, there are frequent outages. Most of the time the servers are down, especially during month ends. And I'm actually surprised, HDFC does 70,000 crores of quarterly PAT. Kotak does 3,500 crores. ICICI has 10,000 crore PAT. So the IT spending has to pick up. And this is not something which is new. And if you see the observations, they have also highlighted the 5 points where they found, the observations. One was inventory management. Second was user access. Then they pointed out to vendor management. And they also pointed out to data security. So there were 5 areas and this is not the first bank. HDFC had a similar issue a couple of years back, took almost 18 months to fix it. So what this does is that in this new digital world, while the current impact looks limited, the growth gets impacted.
Early to estimate the exact impact until we get some more clarity on what exactly is the true digital sourcing for this bank, right? Because if you go by the numbers that they put out in the presentation and take it at face value, then it would seem like a large part of new customer acquisition is going to be stalled. I mean, that could pretty much wipe out growth until this ban remains. But what you've seen in reality is that a lot of these are, based on strict definitions of what I would call digitally sourced customers. So in that case, they could be replaced with, say, telecallers or some of the other channels which are still permitted. So I think it would be early to put down a number on the final impact, but it would be significant because this is unlike, say, HDFC, which had a similar action a few years ago. This is across product segments. So this is not just for credit cards. Well, credit cards is a complete product ban. Banning acquisition of all products through online and mobile channels does lead to a big impact on the growth for this bank.
All right, ACC numbers on your screen, and we have to take the stock ideas of Rajesh as well, but ACC numbers on your screen, let's address them for a moment. I'm looking at the console numbers. You can look at standalone as well, but just looking at the console numbers, revenues at 5,400 crores versus 4,790, which is fine. But I think operationally, they seem to have done something remarkable because the EBITDA numbers seem pretty healthy, really. Just trying to get the math going, but revenues up 13%, yes, consolidated. PAT is at 944 crores versus 235. And yes, there is some tax write-backs that they have gotten, but even profit before tax is at 885 crores versus 331 crores. And if I look at above the operational line items, and even if I add back the depreciation and the finance costs, I think the numbers are rock solid. They have done remarkably well, ACC. Yes, the numbers look better on the bottom line front, the PBT and the PAT front versus EBITDA. But on the EBITDA front as well, they've done okay. And remember, this is coming on the day when Dalmia Bharat has come out and disappointed. ACC was up 4% yesterday, so bear that in mind as well. But the numbers on the face of it look very, very strong. And I wonder, I dare say, if this also has some implications for Ambuja. We should try and pull up Ambuja as well, because the group, and standard disclaimer, of course, ACC and Ambuja are owned by the Adani Group, which also owns NDTV, and you're watching NDTV Profit. So keep that in mind. But with that disclaimer out, I think these numbers look very solid. 79% uptick in EBITDA as well. They've spoken about internal efficiencies coming into play. A lot of efficiencies which were not previously tapped. The Adani Group has said that they will tap into it and gradually up this game. And I think these numbers stand testimony to that.
Margins have expanded as well.
Yes, 79% uptick in EBITDA, Tamanna. Pretty stunning, really.
So from 10% to 15% expansion in margins as well. And, if you look at it comparative to what other cement counters are doing today, not just a Dalmia, Bharat Cement, which of course had poor numbers, and that was the reason you saw the downtick, but even a Ramco, Star, all of them were having a fairly tough time. We should pull up more of those cement counters and see what's happening there. Very quick call from Hemang on ACC. First cut of the numbers, and we're relaying it as we're getting it. But if you were to bet on the cement play, how would you rate an ACC, Hemang?
So clearly, I think the numbers look better. I have not had a detailed look at it, but the EBITDA that we were looking at was about 835 crore. So I think the numbers that they've reported are, slightly better than this. And I think when you look at the valuations vis-a-vis an Ultratech or a Abuja, ACC is still at about 12 to 15% kind of a discount with much better the quality of earnings and EBITDA margins both. So we have a positive view on ACC. We think that the stock can give another maybe 10-12% kind of an upside. We have a target price of 27.50 for a 12-month third time frame.
Okay, that's ACC for you, and of course the flash is now on SJVN. But watch out for ACC. Rajesh, strong stock because it was up 4% earlier this week, up 1.5%. The charts of the derivatives?
Yeah, clearly in uptrend, and now stock is approaching to its multiple supply zone that is placed at around 26 or 20 kind of zone. If stock manages to take out this 2620 level, then possible rally can extend towards 2700 to 2750 also in short period of time. So overall structure is bullish. So those who are already bought this stock can hold on the position with the stop loss of 2550. And we believe that that breakout is likely to be there in near-term perspective. So 2620 needs to keep watch on it closely for next couple of trading session. If it gives the breakout, one can add more position for short-term rally in the stock.
All right, so that's the story with ACC. We saw a sharp up move there coming off just for a bit since there, but intraday you can see ACC up after those numbers have come in. Very quick break, but stick around, a lot more coming up on the other side.
back with India market close right here on NDTV Profit, and the markets are looking stable and looking good. So bear that in mind. Most businesses and most companies which are in news are seemingly doing okay for themselves. Rajesh, we didn't get a chance to talk about your stock recommendations. Can we start with that?
Yeah, surely. So first stock is from metal space. The whole metal space is moving up, and in today's session, we have seen a fresh breakout on JSW Steel. The way stock has managed to give breakout of its previous swing high of January 2024, we believe that this momentum can extend further, and we expect a target towards 935 to 940 for trading perspective. Keep your stop loss at around 895. The second stock that we like at this moment is Container Corp. Again, if we analyze the overall structure for the stock, now stock is approaching towards its previous swing high of 1027. Looking at the overall structure, the way stock has recovered in last couple of weeks, we believe that this Container Corp can have a potential to scale up to the new all-time high trajectory very soon. Possible target we could see towards 1045 to 1050 for short-term perspective. Keep your stop loss now at 985. And the third stock that we like is Kaveri Seeds KSCL. That stocks managed to give breakout of long consolidation on a daily, weekly, as well as on the monthly chart. The way stock has shown a breakout and the volume action in last couple of trading session, that clearly shows that Kaveri Seed can continue furthermore upside, and possible upside target on a short-term perspective could be around 880 to 900. One can keep stop loss at around 805.
All right, Rajesh, those are his top picks, Concor and Kaveri Seeds there as well. Let's talk about Supreme Petrochem now. Numbers are out in Q4. Rakesh Nair, the ED, is with us now on the show talking about the quarterly numbers. Now, revenue, as I see it, is increase of about 12.5%, 13%. EBITDA, though, has shrunk about 16% to 175 crores. Margins also down about 381 pips, and net profits down about 17.5% to 131.5 crores. Mr. Nair, welcome and thank you for speaking with us at NDTV Profit. Can you give us a sense of what have been the headwinds this quarter?
No, there have not been any headwinds, barring that there was this West Asia crisis issue. And generally, the global deltas have also shrunk over the year, and as compared to the previous year in the same quarter. So that has all come in our bottom line. The exports were doing very well, but in the last quarter, our exports are a little down because of the West Asia crisis there, and the Red Sea crisis particularly. Otherwise, there have been no headwinds. The domestic market has been good, and the total sales volume of IC on a year-on-year basis in the quarter, we have done 17.6% more than the corresponding quarter in the previous year. So generally, the quarter has been good.
The West Asia crisis, but I was just looking at your 3-year EBITDA, Mr. Nair, and just help me understand. So I'm seeing 904 crores in FY22, 658 crores in FY23, and then 467 crores in FY24. Is this a realignment, or can you explain to us what's happening here?
See, in the year 22-23, the global deltas are very high because of the freight rates. The freight rates generally of all the container cargo was very, very high, which have now come down to a normal level. And also that during the current year, the deltas between the styrene and the end products have come down or have shrunk marginally globally. So that all has come down and resulted in these numbers here for us.
And likewise with EBITDA margins, I'm assuming the same reason you've had great margins in FY22 because of the freight rates.
Yeah. The FY21, 22, there were all this COVID, after effects of the COVID. There were global plants which were shut. So all that had increased the global margins, and that has also reflected in the Indian market.
Okay. So what is the sort of steady state EBITDA margin that can be guided to or expected? Now we're sitting in FY24 looking at an 8.9% figure. What do you reckon it could be for FY25?
See, the margins are a play of many things, the raw material prices, the global events, the global deltas. So it's very difficult to predict the margins. I can only say that yes, our volume growth would be there. We did almost 325,000 tons of volumes last year. And going forward in this year, we should be doing 8 to 10% more than that.
Mr. Nair, but because the margins are a factor of many things, one love to understand what could a reasonable expectation be? Because you may do volumes, but if the margins contract, then it doesn't quite bring about the earnings growth. So is there some assessment that you can give to your shareholders and viewers?
If everything is static, everything is the same, then we would be doing the same kind of margins as we have done this year.
Okay.
And for the increased quantity, the volume absolute numbers would go up.
Okay. What about expansion plans, if any? Anything on the anvil which might aid volume growth or newer plants that you might be setting up elsewhere?
No, our expansion plans are on, our capex is on, but that all would be completed by the end of this financial year. So the impact of that would start coming in from the next financial year, and the main impact would come in the financial year of the end 27, March 27.
Okay, I'm just trying to understand. So if you have steady state growth, I heard you speak about some volume growth for FY25, which is fine. What's the kind of growth that comes in for FY26 or 27 because of the added capacities?
See, we are setting up with 70,000 tons of mass ABS project, which would be ready by the fourth quarter of this year. So the part of that quantity would come in the next year. And it is the first time that product is being introduced in the Indian market. So we expect that in the year 26-27, we should be able to do almost the same 70,000 tons would get added, apart from the regular volume growth in our existing product lines.
And just trying to understand, what is that addition amount to in terms of, let's say, a percentage over what your normal growth would be?
The 70,000 tons additional quantities, today we are doing 325, or this year we'll do more than 350,000. So that 70,000 brings in another 20% volume growth for us.
Okay.
Mr. Nair, you talked about geopolitical issues in West Asia being a bit of a challenge this quarter. Now, how do you see that playing out? Because once again, this is, in the realm of uncertainty. And if we do continue to have conflagrations, can you just give us a sense of how the impact will play out for you and how it hits you?
The West Asia issue, the Red Sea issue, that had an impact on our exports, because now the Suez Canal is not available to us for exporting our cargo. So we have to go through the other longer route, which takes almost 3 weeks more, and the freight rates are higher. So aligning the whole thing with the customers and the getting new orders on the new rates with the new freight rates and all that has taken time. But now every customer in the European market, in the Turkey market, has understood that is the reality. So they all have, they kind of going to live with it. And we hope that our volumes in the export market would not be impacted going forward now.
Okay. And do you see the first signs of those volumes stabilizing, or do you have an outlook where you see?
Yeah, this is what we are seeing now, that the orders are coming in now at the new rates and the new freight rates. So, and now we are also exploring new markets and new customers. So we expect that our total export volumes would be better than the previous year.
Okay. Thank you so much, Mr. Nair, for speaking with us today of Supreme Petro there, talking about their quarterly numbers. Very quick break. On the other side, we talk about Nestle, what their Q4 look like. The stock is up today. There's a FSSAI statement saying that they're going to look at all of samples of their baby food across the country. It's made no impact on Nestle at all. The stock is up 2.5%. More on Nestle, ITC, HUL, and what's happening in the F&O space. All of that on the other side. Stay tuned. Welcome back. Let's just look at what's happening. The story of the day continues to be Kotak, but apart from that, some very sharp moves coming in on the broader market side as well. I'm looking at an MCX today up 8%. There's a Motilal Oswal note on them. Bharat Forge also doing very well, and we will get my colleague Puneet up in a second to talk about the UBS note on Bharat Forge and why Bharat Forge is looking good. But even apart from that, Mazgaon Docks doing great. Axis Bank, fantastic today. Dilip Bhatt is joining us now. He's the founder of Pedigree. Mr. Bhatt, good afternoon. I hope I said that correctly. How are you doing, and what would you do with an Axis Bank and a Kotak Mahindra Bank today? All right, I'll try and get Dilip back in just a bit from now, but Rajesh Palvia is also with us. Rajesh, can you hear me?
Yeah.
Okay. Chalo. MCX. Tell me your take on an MCX up 8% today.
Very strong really in today's session, and the way stock managed to give breakout of last 5-6 days consolidation range, it clearly shows that this really can extend further, and possible target on the high side we could see towards 4400 to 4500. So stock is bullish across all time frames. So I think buy on dip should be your strategy in the MCX. In the previous day we have seen a dip of around 4 to 5%, and again the kind of buying interest in today's session, that clearly shows that there is a confidence on a street for the stock, and the way stock is moving across all time frame, that clearly shows this really can extend. 4,400 to 4,500 would be the positional target on the stock. Your stop loss should be placed at around 39.50 to keep accumulating this stock for positional perspective.
I'm just also, since we're talking about an MCX, look at a Motilal Oswal, pull up a CRISIL. Everything capital markets related, 361, up another 5% today. All of these stocks having a great day. AB Capital also not bad at all, 6% up. Now, another area that we should focus on is FMCG. Nestle just came out with a strong set of Q4 numbers, with Nespresso and a JV with Dr. Reddy's in the pipeline. That's why the excitement perhaps on a Nestle. The future quarters also look interesting for the company. Mahima joins in to tell us more. Mahima, I'm very excited about Nespresso. I would love to see what happens there. But apart from that, Nestle seems to have shrugged off this baby food concern quite strongly, isn't it? Was there any mention at all in their statements after?
No, Tamanna, there is no mention about sugar in their baby food, and the stock is doing pretty well, considering the results that have come out, the strong results that have come out with. The domestic sales have grown around 9%. Now, this is on the back of strategic pricing and their favorable product mix. Their export sales have grown around 19% year on year, and this is because there was strong demand in places like Canada, US, Australia, New Zealand, etc. Now, in terms of gross margin expanded around 300 basis points, and their EBITDA margins also grew by around 220 basis points. This is because their cost of raw material consumed decreased from 46% to 43%. Now, in terms of their segments, beverages segment witnessed a double-digit growth. Confectionery delivered a strong performance with fueled by KitKat. Milk products and nutrition witnessed a strong growth despite the inflationary pressures. And now talking about the business updates that they've given in JV with Dr. Reddy's. Now, this will be a JV between the two companies, and where 51% will be held by Dr. Reddy's and 49% by Nestle. And this will be for manufacturing and production and marketing of nutraceuticals. And they've also they've also launched Nespresso, which you're excited about, where they'll be selling coffee machines and coffee across India, and they'll also be launching a boutique in Delhi soon. Now, in terms of commodity outlook, the company has given some kind of commodity outlook in their results. They've said that they're seeing unprecedented headwinds in coffee and cocoa. They're also expecting milk prices to rise on account of harsh summers, and they're also said that cereals and grains are going through structural cost increase backed by MSC. So in near future, we might see some kind of pressure on margins if they do not pass the increase of price to the customers. Otherwise, their margins will be maintained. So this is the overall view of Nestle's results.
So no clarity, I suppose, on whether they will pass on their prices on coffee and cocoa, etc. But Nestle doing well at this point. All right, let's look at what's happening on the F&O side of things. Today is expiry day, monthly expiry. In fact, Agam, has it been largely smooth sailing?
You know, if you don't ask me about call writers, then it's been an excellent day for a lot of these traders on the futures and options space. But, like I mentioned, we've seen a fair bit of volatility throughout the course of the session. And to be honest, in the first 1 hour of trade was extremely, extremely hard to trade because we saw a very sharp up move, and then we saw a very sharp down move. And then eventually, while things started moving out and smoothing out, that actually led to a very, very sharp up move once again. The big positive, of course, is that the Nifty is now above the mark of 22,500. The rollover standing at around 55%. This number specifically is not a very high number. You usually tend to have about 65 to 70% in terms of rollovers. So I reckon that at this point in time, we still have a lot of hesitancy from the trader community. But I can understand that because we are in election season at the moment, and I reckon that a lot of traders would wait and want to watch out for several more factors, several more feelers, as we move into the next few weeks. That said, this is your May increase in open interest, about 22%, but I reckon the rollover gives you a fair enough picture of how positions are panning out. The Bank Nifty, let's pull that up. Let's see how the May futures are coming through. So we are looking at a 20% increase there as well, on expected lines perhaps. And, all the weakness in Kotak Mahindra Bank has been absorbed by Axis Bank as well as SBI. So that's, of course, another big positive. Let's pull up the Nifty options market and see, how things have panned out there as well. And naturally, considering we are going to see the expiry somewhere around 22,600, that's exactly where we are starting to see a little bit more writing in terms of calls inputs as well. Moving on, I want to talk about stocks. And in terms of stocks, I reckon Kotak Mahindra Bank will stand out in terms of the kind of change in open interest that we've seen. We must remember that today being the final day of the weekly expiry. Actually, I did want to talk about stocks since we've covered this bit. Let's talk about all the stocks which are in fact seeing an increase in OI. And of course, this April futures. Surprisingly, even in April futures, considering it's the last day, we're seeing some amount of traction here in terms of ITC, Shriram Finance, Bajaj Finserv, Dr. Reddy's Marico. And in terms of unwinding, not too much to speak for, but naturally, this is once again on expected lines. We will see some very large numbers coming through. It doesn't necessarily mean that all these stocks are seeing unwinding. All in all, it's turned out to be a good day of trade for the bulls, for those who are playing directionally on the upside, because we once again moved above the mark of 22,500. And for the Bank Nifty as well, the weakness in Kotak Bank has been bought into in other private sector names, and that is also perhaps a positive going forward.
Thanks for that, Agam. Laurus Labs numbers on your screen as well, and that should be watched out for just before we get to our guests. And the street would understandably be disappointed because ahead of the numbers, murmurs of margins closer to 21 or 22% had started to come. There was an antique note, if I'm not wrong, or one of the brokerage notes which said that there could well be a number which might be closer to 21 or 22%. Remember, in the quarter three, the management had said that they will move towards 20%. I think the street thought that it will essentially be 20%. Brokerage has estimated that, and the margin number is still below 17%, and that is the disappointment. Now, the question is only that on the con call or in the interview that he does with us tomorrow, does he talk about what could happen in quarter one in terms of margins being high, because that could help the stock. But otherwise, must say, yes, relative to the previous 3 quarters, the margin performance is strong. But otherwise, a bit of a disappointment, if you will, that the street anticipated 20-21%, and that the margins have come in at sub 17%. So 2.5% lower for Laurus Labs in the session today.
Yeah, but just Niraj, net profits also down about 28%, EBITDA down as well about 15%. So yes, margin pressure is there, but something seems to have not worked too well for Laurus Labs this time because revenues are up only 4%. That was in line with expectations? Yeah, actually, well, on the revenue front, because of the base quarter going away. So now what will happen is that starting quarter one, FY24, it's 3 quarters of very low base, both on the margin and the revenue front. So suddenly you will start seeing pretty decent performance on the revenue and the margin front. But the problem, Tamanna, I think, is this, that somehow the street believed that they will do closer to 20% in quarter 4. They haven't quite done that. Is it a case of a delayed gratification coming in because of the CDMO business turning around? Because Jonathan Hunt of Syngene was talking about the same thing. And Laurus has a large CDMO division now. Can it show its magic in quarter 1 is the key question. Yeah, and that thing about base effect, waiting for the base effect magic to kick in. So Dilip Bhatt is joining with us. We've finally got you on. Dilip, can you hear me?
Loud and clear.
All right, superb. Great to have you here this afternoon and to speak with you as you know we wind down closing. The big stories of the day. I wanted to ask you about Kotak and Axis and how you would play both of these, how you see both these counters with future potential right now.
I think the price of Kotak Bank has behaved on the expected line. I think the knee-jerk reaction, which was expected, and that has really played out. Now, do I see a further fall from these levels? I don't think so. And I would certainly think of an opportunity to buy this kind of a company around these kind of falls and possibly for a longer time horizon. At the same time, I know that these kind of problems which the RBI has specified, it doesn't go overnight. It may take a couple of quarters before it settles down and before the RBI gives a green signal is what broadly I would think. And in the intervening period, maybe some compression in terms of NIMs and some scaling down of the loans. All those things will play out. But from the current levels, I think, yes, I will still look to buy this stock from the current levels or maybe another 5 to 7% lower. But yes, it looks good. Coming to Axis Bank, I think the profits have not been all that great. The more important thing is the gross NPA and the net NPA. I think they have played out much better than the expectation on an overall basis. So I would say that Axis Bank still continues to look pretty good because it has not done anything big in terms of the price movement. Of course, it has moved up, but not done anything big. As compared to if you take ICICI Bank and others. So on a relative basis, yes, Axis Bank in the private sector does look good because it's not even overall stock, unlike your HDFC Bank and ICICI Bank.
Okay. Dilip Bhai, good afternoon. Niraj here. There is a lot of traction that we're seeing in FMCG despite the fact that the numbers or the commentary from the 2 large companies that have come out thus far doesn't seem to be too exciting. Yes, there is a development about Nestle and one more company, Dr. Reddy's in particular, but even the others are kind of doing okay. What do you make of investing in some of these FMCG names, particularly the staple companies?
Good afternoon, Niraj. It's always great to interact with you.
Likewise.
Niraj, I think the FMCG space has still to see the volume growth kicking in from the other than urban areas. So other than urban areas, I think the volume growth still continues to be muted. Now, I think Hindustan Lever was very loud and clear as far as this particular aspect was concerned. And I think this issue has been the chronic issue now for almost about 18 months. And we have yet to see the revival in demand, especially in terms of the volumes in other than the urban areas. So what I would say is that there are 3-4 factors have probably loaded in favor of the FMCGs. One is, a lot of things have the lack of volume growth. Everything is there in the price. Now, what can really benefit them is maybe the cooling of inflationary pressures. But as what we can see, that inflation keeps on rearing its head time and again and disturbs the equation. But I think the cooling of inflation is certainly going to be a lot more beneficial for them. They already taken a price increase. So somewhere I think there could be a momentum play in this particular sector, which I think if one is ready to hold on for 3 to 6 months, one can get some kind of momentum play across FMCG, and more so in a company like, I would say, Levers. I will say something like even Dabur, and I would say even something like Marico. All these companies probably will stand out in some way. Even Godrej Consumer also looks pretty good and interesting from the current levels. So I think some of these, it should be there on the watch list for 6 to 9 months play.
All right. Let's quickly get in Puneet, my colleague who's tracking Bharat Forge. Now look at Bharat Forge has had a very smart move today on the back of a double upgrade by BofA. What is BofA liking so much about Bharat Forge, Puneet? The stock is up 8%, of course, but what is their rationale?
Well, yeah, rightly said, Tamanna. So a double upgrade with a target price of 1450, which is roughly an 18 to 19% upside. Now, do know that the stock is very close to its 52-week high of 1330 rupees per share. Now, what is driving the optimism is the brokerage note is saying that the widely expected downturn in the truck market might be elusive, is what the brokerage is saying. They are saying that the expectations of the truck market to do very, very poorly might not be as bad as they thought so. They've said that the truck down cycle, if anything, is expected in the H2 of 2025, and they are saying that this might be short-lived. Now, they have spoken to a few large global OEMs and truck makers. They are pointing to steady fundamental demand, while a couple of parameters that they track, basically like the spot truck rentals or the used truck vehicles, the prices of all those have been inching up, which is a positive for the company. Now, one of the key triggers here is the upcoming emission norms in 2027. Now, the management had guided that there will be pre-buying in 2024 to 26, and the brokerages have affirmed the same. They are very, very positive on this pre-buying. Finally, what they are saying is that the other verticals such as defense as well as industrials are scaling up very, very well, and they have estimately upped their estimates by 7 to 15% and raising the multiple to 18 times EV by EBITDA. Now, what the management had said on this pre-buying was that from 2024 to 2026, they are expecting 1 million vehicles to get sold, and someone like a Bharat Forge will be a key beneficiary of this. They've also said that the defense business is expected to have 1,000 crores of revenue, and they already have another 2,000 crore of order book currently. Finally, the next milestone is roughly 2,500 crores of revenue from this defense vertical in the next 2 to 3 years. And apart from BofA, there are roughly 19 buy calls on the stock. So really positive commentary on the truck market as well as on Bharat Forge specifically, leading to the biggest such an up move today, biggest move in the year to date after the Q3 results. Back to you.
Biggest move in the year today after the Q3 results. Thank you so much for that, Puneet. Dilip Bhatt is with us. Rajesh Palvia is with us. Dilip Bhatt, do you like Bharat Forge? Mr. Bhatt, can you hear me? Can you hear me? Okay, some issue with that audio with Dilip today. Rajesh, your view on a Bharat Forge already run up about 7.5-8% today?
Yeah, so definitely the stock, the way stock is moving up, and now stock is approaching to its previous swing high of Feb 2024. Looking at the overall structure, we are holding our bullish view, and we expect this rally may extend further, and possible upside target we could see towards 1380 to 1400 kind of zone for Bharat Forge. So overall structure is bullish. Those who are already holding the position or willing to buy at current level, they can hold and buy at current level also with stop loss of 1270. And we believe that in short term we could see target towards 1400 for Bharat Forge.
All right. So it's been a day of big results and a lot of good conversations on NDTV profit with managements of these companies. Remember, if you want to see those full interviews, please go to our social media platforms. Of course, you'll get all the information on our website as well. But let's just take a look at some of those conversations we had today.
Ours is a bit of a seasonal business. So Q3 is always the best quarter and will remain in the foreseeable future. Q4 is the second best quarter. And as the base keeps increasing, the percentage rise will start declining, because just imagine coming out of COVID, where we had almost nothing. We started showing growth in like triple digits. And then it went to high double digits. And at some point of time, it has to come back to single digit. Important is to look at the CAGR of last 5-6 years. And if we looked at that, then we are showing and demonstrating, both as a sector as well as our company, a very high and a very healthy growth.
Good margin performance in the fourth quarter. Some of it's deep and underlying. It reflects the work that we've done around business efficiency, better procurement, better operating efficiency. But I would temper the enthusiasm. What's the expression? There's only two certainties in life: death and taxation. And of course, the fourth quarter did benefit from a tax rebate. Now, everybody likes to get one of those, whether it's a personal one at a corporate level, but that's some of what was driving that. I wouldn't predict that every quarter in the future we'll have a check coming back from a taxman. So we're happy about it. I don't think it sets a new high for us.
So last year, we had to raise a higher level of deposit, because that's the way we could decrease our CD ratio. But that is not a major requirement going forward. We should be looking at about a 25% growth in advances for FY25. And to support a 25% growth, we need a deposit growth of anywhere in the range of 32 to 34%, which will help take care of the SLR requirements and keep the CD ratio steady. So somewhere around 32, 33% deposit growth is what we would be looking for in FY25.
Client sentiment is actually very similar to what we saw in calendar year 23. We're seeing calendar year 24 on very similar lines. Clients are cautious about the macro environment that they're seeing. The only difference, I think, is that they're getting more used to that this environment is going to be there for some more time, and then they're reprioritizing their spend priorities accordingly.
Okay. That's the word from some of the managements who spoke to us earlier. Before we wrap up or start wrapping up the markets, I don't know if we have Dilip Bhatt still, and whether he can hear us or no. But Rajesh, maybe you gave us your closing strategies, but a set of stocks that have had a really good run in the last few days, the Inox twins. Today, they have declared a bonus 3-1 for Inox Wind. That stock is up 7%. Inox Wind Energy is up 5%. At highs, I believe, both of these. Can Inox Wind do more?
The way stock is moving in last couple of months, we believe that, the way stock is moving up, stock is moving in up-sloping channel on monthly as well as on the weekly chart. That clearly shows sustained buying is taking place. Yes, there is a high possibility that the stock may continue furthermore upside. A possible target we could see towards 700 to 720 on the higher side. So yes, one can buy this stock at current level also. Even if you get any chance in decline, you can add furthermore. Your stop loss should be placed at around 605.
05 is the stop loss. Okay. And Rajesh, before we thank you, we've spoken about a lot of individual names within the banking space, yes, including Kotak and Axis. But I was just wondering if we had to get a view on either the top stock losing out in the session today or amongst the top gainers. So Glenmark Life down 8%. How is that on the charts? And on the flip side, MCX, which is up 8%.
So definitely the sentiment and the trend of market is on the bullish side. So I think one should look to look for buying opportunity. And I think MCX is a stock where we are seeing the kind of rally. That stock clearly showing the sign that we could see the continuation of rally towards 4,400, 4,500 kind of zone for MCX. So that stock is a buy with stop loss of even in the decline also you can add 39702 should be your stop loss to buy and hold the MCX at the current level.
What would be your top 2 BTST calls, Rajesh?
So first one is from PSU Bank, that is Canara Bank, very strong buying action in the PSU space, PSU banking space. So Canara Bank would be a stock where we can see target towards 630 to 635. Keep your stop loss at around 609. And the second stock that we like is Raymond. That stock is also showing good traction, and the way stock is holding the ground at higher level, we believe that Raymond can show uptick in tomorrow's opening and possible target towards 2180 to 2200 we can see, and one can keep a stop loss of 2090 to buy Raymond also.
Rajesh, really appreciate you taking the time out and being with us as always. Thanks for your time today. That's the view from Rajesh Palvia. Let's start wrapping up the markets. A minute and a half left for the markets to shut shop. Not a bad close, you have to admit, really. I mean, for the markets to do what they've done. Support from banks, PSU banks in particular, but a lot of others as well. And just quickly, the mid-cap and the small-cap indices on your screen, just to check whether the market breadth is positive. And yes, it is. I mean, 0.5%, so nothing rara, but the small caps have done well, 0.8%. Let's get the heat map up on the screen and look at the gainers. We know the losers are punctuated by Kotak, LTI and HUL. Oh, even Titan. But the gaining list, Axis is up 6%. SBI is up 5%. For State Bank of India to move 5% is quite stunning. But there is also gains for Dr. Reddy's and Nestle on the back of, presumably on the back of this JV. I see no other reason why for nutraceuticals that they have done. It's possibly a win-win for both. Hero MotoCorp does well. Adani Enterprises does well today. So that's a good one. ITC is up about a couple of percentage points. So that's not done badly. And JSW Steel from amongst the metal names doing okay. Essentially a rising tide which has carried almost all boats along with it. But the real action in today's session as well. Actually, you would say that small caps have had as good a day as the large caps have had.
Absolutely, and it's all about the numbers, I would say, Niraj. You just pull up the BSE 500 topics and you see about how it very clearly reflects what's happening with the numbers, and if there are positive notes. Supreme Petrochem, we spoke to them. What an up move there. Nearly 9% up. Stock was up about 2-3% when we were talking to the management. MCX, positive note there coming in from Motilal Oswal. Bharat Forge, positive note there coming in from UBS, and that's why perhaps you're seeing some of those moves over here. Dalmia Bharat, poor numbers. Spark, I told you, permanent residents in the bottom 5% list one more day. Indian hotels, also the numbers left a bit to be desired. I would say cement overall had a poor day, apart from an ACC. I want to see how an ACC has closed up. Their numbers came in and they've paired off their gains, but not too bad at the end of it. Vodafone is another stock that we should pull up as we wrap up the market post the FPO. And I don't know if you can pull up a week's chart, because what gyrations on Vodafone, down 9% one day, up 5% the other day. If anyone's really punted on this, they would be having sleepless nights, I suppose. Net in a week up about 4%, but sharp moves here, very difficult to catch those tides, I suppose. But Vodafone has been another interesting play that you could mention today.
Wonder what Laurus is closing with the slightly actually a disappointment numbers. Yep, 2.5% lower. So this one is also in the red today.
Mm-hmm. The management's just put out another press release on their outlook saying that they expect margins to improve. Let's pull up the chart, the intraday of Laurus, and see if they tempered off their losses towards the end. That statement came in just a short while before market close. No, not too much of a relief there as far as Laurus is concerned. But yes, by and by, not a bad day for the markets, one would reckon. Bang in the middle of the thick of results season.
On expiry day.
And on expiry day. Actually, expiry day went much quieter than what was expected. So no real complaints here. But I think that's all the time we have on India Market Close. So from Niraj, me and the team who put the show together, thank you so much for watching.
Strong sessions yet again. The Bank Nifty up for the 5th consecutive session. The market's doing an encore too. So not a bad day of trade, you have to admit. And the small caps did as well as the large caps did. About 0.8% for the small cap index. So good going really. Pull up the heat map. A splattering of green, very little red. Confined to maybe Kotak and LTI and HUL and Titan. Those are the three